Hey guys, Pierce with everything on this channel is for educational purposes only and is not intended as financial advice. So in the last video, we were talking about the total market cap death cross. We got that a couple days ago. Again, doesn't look good if you are completely divorced from whatever product this is. You're thinking to yourself, this isn't a buy here. Maybe you start your DCA engaging, you start buying the dip here, buying the dip there, little nibble here, little nibble there, but you're not lump summing anything, at least based on what I'm seeing in my own investing. That's not what I would be doing here. Looking at alts, I keep hearing about alt season, just like I do every day. Same story, even worse, way past death cross, and we're seeing price get denied at the 50 several times now with a massive rejection and a possible rising wedge. So this chart is basically like ETH plus LTC, and a few other things, but that rejection the other day was absolutely brutal on that reversal. So what would you be looking for if you're looking for EMA crosses? You're looking for stuff that's curling up, not curling down. You're looking for price above the 200. You're looking for a bull cross, golden cross instead of a death cross. You're looking for some semblance of bullish anything, and it's just not there right now. In August 27th, so nearly 2 months ago, I brought this up. So this is Bitcoin, ETH, XRP, LTC, EOS, Binance, Stellar, Monero, basically the top 8-ish. And at that time, none of the alts looked good. BTC and Binance at the time looked the best of anything. Monero as well, just because it hadn't death crossed yet. But fast forward to today, and everything's either death crossed or BTC is about to death cross. Again, this is just echoing the first two charts, but teasing them apart. None of this stuff looks great. You could argue that we're starting to see some curling up here on the XRP 50. So, without looking at price, you can see that near term things are moving up. Versus Monero, where near term things are just getting pummeled. It's at 53 here. XLM is another one. If I had to go rank these in order of bullishness to bearishness, XRP and XLM would be the most mean reversion ready, whereas BTC, is ready for its death cross. Doesn't look great, certainly, and I wouldn't buy any of these things. Why would you? They just don't look good, And here's the BTC pairs. The first thing I catches my eye is Monero. It just looks fundamentally broken. Basically, the 50 and the 200 have been at a 45-degree angle for a year. That's just not normal for something with 3%, 3.6% inflation currently. You compare that to Zeke, and it just looks like night and day even. So I was talking to a few people, is there an inflation bug going on there that we don't know about? It just looks like, again, if you're divorced from the instrument completely and you say to yourself, what's really going on here? Is there a fundamental issue? Is there problems with on-off ramp? What's the deal here? It just doesn't look great. I'm not trying to FUD or anything, but that, again, this is the furthest thing from a buy. So take a snapshot for kink and put it in your bearish bank. Again, XRP and XLM look pretty good because the 50's curving up. ETH as well. All these look okay. EOS even, you could argue a mean reversion play. The same with Litecoin, just based on the distance of the 50 and the 200. Essentially, it says these look super oversold, so it might be worth taking a stab here. Whereas XRP actually looks like it's got some bullish momentum in front of it. And I cannot stand XRP. No one hates XRP more than me. But hey, that's just what the text says, okay? USDT and Bitfinex Premium have been quiet. Nothing going on lately, which is good. There's some little stuff for, this little $1 trillion class action for Bitfinex and Tether. But other than that, there's, the price hasn't reacted at all, which is important. Hasn't been any craziness on the market side. And looking at CME futures contracts, coming up on another expiry, going sideways into an expiry, hasn't been well historically. Well, bullish historically. Let me rephrase that. Down, 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 sideways, down, down, down. You get the point. If we stay sideways into like 3 days before the 25th, what is it, 22nd, something like that, it's usually when things start to move historically. I don't know. Just look at it. I mean, so if we're sideways into the 25th, I don't think we're gonna do too well here on the charts. 8K definitely the level to break. If we zoom in on the 4-hour, doesn't look too bad. Honestly, we're still in the range. We had some range expansion, got denied at the 200 pretty well. Pretty sick 5%. What was that, midnight Tokyo or midnight EST Tokyo lunchtime or something? Yeah, smack dab in the middle of the range. Nothing crazy. Again, this isn't, like I said last video, I'm not longing or shorting anything insanely until we break the range, because why would you? You're just going to get chopped up continuously. And you can certainly play lower time frames if you want, but why bother? Look at this. Just look at what we've been sitting through since the 23rd of September. It's just been nothing. And oftentimes when I see like this just crazy chop, I'm thinking to myself, what the heck is really going on here? We could fit a pretty dirty looking diamond here, diamond bottom. It's certainly got the volume profile for it. Looks better on the index, but the volume profile. But the tell for me for the diamond stuff is anything that has just this massive range and then just comes back to like the median of the range. And we're sort of there now. So this is a possibility. I certainly wouldn't get super excited about the prospect of it actually working out. But 50% of the range between the recent high and the recent local low would be basically the measured move of the diamond. So certainly not out of the question. It's also the local high sort of this previous consolidation zone. Not rocket science, just horizontals. But overall, the big supports at 8K. And if that breaks, we're breaking yearly pivots. We're breaking VPVR on just the past 6 months. One thing that does look pretty good for reversal, though, is the cloud. The TKC clamp situation. This is the Tenkin, this is the Kijun. Just think of these as EMAs again, similar to the 50 and the 200. When they're spread apart like this, there reaches a point where they flatten out. And at that point, you can say to yourself, there's a higher probability of mean reversion than continuation. Because basically it's saying the move is sort of completed, it's done, and we're sideways. So the cloud is optimistic. That's how I would read this. Certainly not macro bullish, but mean reversion-y bullish back up to 9.3 on the daily. And I'll show ETH later on, but similar to ETH, there is a potential for an edge-to-edge setup on BTC from like 8.8 to 10.8. So that's by year's end, we will know if that happens. Something to watch for. Historically, edge-to-edge trades on the daily for Bitcoin are like 75%. So 75% have played out as expected. So if that engages, it's certainly a trade I'll be taking. If we look at the 12-hour, again, you can see the C-clamp situation. We dropped, we went sideways. You don't really need to see the price to see what's going on here. Again, 9.3, 9.1, these are all levels on the cloud that you'd be looking for a mean reversion play. If we turn on fractals and EMAs, alligator stuff on the 12-hour, it's sort of looking like it did before the break from 10K. How we had this go long up here, go short up here. EMAs flipped bearish. As they are flipping bearish again now, they've sort of reset. And I don't like shorting above support, but the alligator is currently calling for a short with the EMAs as we break this level. This goes against everything I previously said about being in the range and not playing anything, but based on the low time frame EMAs, that's what we're seeing here. A lot of people are comparing Q1 2019 with like the current price action. I think that's fair. I think fractal wise, it doesn't need to be identical. You can call it Wyckoff accumulation. It's certainly not identical anymore. You can see we were curling up basically for a month, whereas now we're not. We've stopped curling up. We're definitely pushing down again. But if we break 8.7, I think this time, like we sort of had a fake out previously, we had a fake out here at the 200. I think if we break 8.7 this time, we'll have some bullish volume, bullish momentum to push us up further to that 9193 zone. All right, let's move to ETH. ETH is ETH. It is what it is. Some people were disappointed, upset perhaps in the comments in the last video, talking about how I'm a paid actor for these altcoins. I can assure you I'm not, but ETH is setting up for an edge-to-edge situation from 190 to 260-ish. And again, on the line chart, it just looks super clean. We were pounding on resistance, moved up. Now we're kind of pounding on support. And if that breaks, we're talking low not single digits, double digits, 67, I think is what it says in the pitchfork. But the flip side of that is if we push up through the cloud, 260 looks pretty likely. The edge-to-edge trades on the daily for ETH are nearly 100%. They're above 80%. There's only been like 5 or 6 historically. Very few that have been this large. So again, something I'll be watching for, especially if we don't break lows. Doesn't look great now. It looks like a hot mess right now, but overall, something to watch. And something that sort of backs up that bullish theory is that if we break this pitchfork like once and for all, which we can't seem to be doing, this is like double extended based on this low. But if we can't break this pitchfork, sort of like it's got like this weak gravitational pull here. It's way out of the midline. But if we can't break it, it's going to 67. It's going to 70. It's going to revisit these lows if it breaks down from 160. And we can hypothesize that based on the MakerDAO stuff, the liquidations on the CDPs, the 2 million ETH being held by ICO treasuries still, yada, yada, yada. I mean, there's a hard fork coming. There's ETH, there's phase 0 point whatever coming. But the tech is the tech. And if we don't break this soon, it's going to be pretty bearish. This is a single edge-to-edge that didn't work out. I mean, you can argue this didn't work out here, but even this is pretty close. This is coming off 128% swing from the low. So I'm pretty optimistic that we're actually going to be okay here in the near term on ETH, as well as BTC. But it doesn't look great currently. This is ETH BTC on a 12-hour. Mentioned this in the last video, talking about the 5200 cross. Still hasn't occurred yet, but it's looking pretty likely as long as it stays sideways here. And upside's like 14-15%, something around 0.257 would be like volume resistance, but it definitely could go higher than that in the near term. And then let me just hit on XRP USD real quick. It was in this nice, I didn't trade any of this because who trades XRP really, but it was in this nice banana type thing, and ETH had a similar, let me find a good chart real quick. ETH had a similar like low time frame banana thing, and look how that turned out. It basically retraced the whole thing. So it's not unreasonable that this just like, goes back to 0.024 or something like that. All right, that's all I have for this one. Like, dislike, comment, share, subscribe. Let me know how bearish you are in the comments below, and happy trading.